Welcome to Daily Tax Savings. This is Tony Novak here to share viewpoints on saving taxes and staying out of tax trouble. Today's topic is employee misclassification. And as usual, we're focused on small businesses, in this case, even household employers, but in people who hire others and call them subcontractors rather than call them employees. Why? Well, two reasons. One, it's a little bit more expensive to pay an employee than a subcontractor because you have to pay wage taxes. Often, and the people that I talk to, it's not so much the perhaps 15% difference in cost per hour of a subcontractor and employee, but rather the difficulty and nuisance of setting up a payroll system. So let me first say that shouldn't be an obstacle. If you have somebody qualified, somebody like me or equivalent, it should be just second nature. My clients don't think twice about it. They know that their payroll is handled. It costs, I guess it's about $100 a month now. So it is an ongoing cost for a small business, but they're pretty much automated and trouble free. Most of my small business clients handle it through text message now, and all the transactions are electronic and deposited directly. So it's a simple thing. It shouldn't be an obstacle, but it is. Okay. So that's why small businesses use subcontractors rather than employees. What are the risks? There's actually three different sources of risks, and those risks are different than what most people suspect, and that's what I want to focus on. First of all, the one that people talk about, think about, and frankly are in the news most is federal, IRS, tax audit risk. IRS can reclassify contractors as employees, and that generates a significant tax due if you've been doing it for some time. The news item surrounding this is that the IRS in 2024, last year, implemented new rules that made it even tougher on employers to classify workers as subcontractors, and they have paused those new rules and gone back to the old rules. The problem is, or the misperception is, that that there's some leeway given, that employers get a pass and that they can get away with subcontractor status. That's not the case. The old rules were strict enough. This is saying the new rules were even more strict, but the old rules were certainly strict enough to cause many small employers problems. The second source of possible trouble, and in fact more common than federal audit, is state audit. Workers' compensation related issues and state taxes. And I've had more of those state cases than federal cases. And the problem is that when the state audits and assesses an additional tax and the case is closed, those results are often sent, at least in my state of New Jersey, they're sent to the IRS. So then the IRS can start the process all over again and assert the same taxes. So the state is more risky than the IRS. But there's one source of risk that's bigger than those two, and that is the employees themselves. There are more complaints by employees that trigger both tax and civil liability. The liability is not just tax. There are others. You have a subcontractor not covered by workers' comp and they get hurt. They go talk to a lawyer. The lawyer is happy to take the case, and they do. And that can be a significant burden and cost to the employer. So the biggest risk is your employees themselves when they are disgruntled for any reason and decide to assert that they should have been employees and not subcontractors. The second is the state, and the third is the federal government. Don't get snagged or fooled by the current media business discussion about the pause of 2024 employee Misclassification rules. If you're interested, I have a pretty good plain language article. Who is your employee? I'd be happy to send that. Reach out on social media, or if you want to talk with me one-on-one about your situation, that's easy to do also. Find me at taxproblems.cpa. And I'll be back tomorrow with another tax savings